Hi there and welcome to the Moneyman Show. In this video I'm going to review our current trades and I'm going to introduce a very powerful trading tool. It's the divergency of the stochastic. So what is the divergency? Is if on a low, for example, to go long, if you have a low right here and this low is lower than this one, and you have the stochastic at or above the same price, you see the divergency, the price goes up. Okay, but it needs to be something that is visible, not near. The price cannot be near. Here it's very far apart. Okay, the stochastic is going up and the price is going down. So in this bottom the stochastic is higher. This is a positive divergency, the price goes higher. In here on the top you see the top of the stochastics, on the bottom you see the bottoms and the lows of the stochastic. In this side the stochastic is here, in this side the stochastic is here, so this is the normal flow. Here there's no divergency. Okay, so this is a Google trade, the inverted head and shoulders. It's going fine. Here you had the fake out of the earnings. A lot of people got out or deceived. Still believe this is going just as planned. The stochastic, this is a weekly chart. The stochastic is crossing to the upside. I expect very good things from Google. Okay, so remember this divergency, because this is very important. We are going to analyze some charts and see the importance of that. For example, our other trade, the euro dollar. If you see on the top, this top and this top. Okay, so let's see tops. We have to see tops on stochastic also, right? So this top on the stochastic is here and this top is here or here. So stochastic is at or above this one and the price is much lower. This is a negative divergency, so the price goes down lower than this low. Okay, divergency, so price is lower, the stochastic at or above the previous high. For example, if you see here, you have this low and this low, they are almost identical, and the stochastic is a little bit higher, so the price goes higher, but this is not a clear divergency. This is okay, and if you see here, this high, the stochastic is here, this high, the stochastic is higher, but it's a normal flow. The problem is here. Okay, so now we are going to see the most important one. It's the S&P, and the S&P, as you can see, for example, you have this higher right here and you have this high right here. So to the highs you go and check the highs of the stochastic, and as you can see here, the stochastic is almost at the same level as here and the price is much lower. What does this give us? A lower trend. And also, if you see on the lows of the price, you go and check the lows of the stochastic, and if you see this low is higher than this low and the price is also, so in here you don't get any divergency, so it's a normal flow of the market. Here this is also the normal flow of the market. You see here when the stochastic was here, it's almost at the same price as here, so this is identical. Okay, but what I wanted to show you is some other examples. Here, for example, you have this eye right here, and you go and look for the previous eye, it's here, or even this one. Check the stochastic in here. Stochastic is almost at 100, and the price is much lower than the previous eyes, especially from this one. So this is a clear divergence. The price goes down lower than this one. See, lower than this trend, price goes lower than this one. Or cases, and this one is important also. You see, this stochastic is higher than this one in here, and the prices are not in here, is not higher, is lower, so the price goes down. It doesn't go lower than this one because it's almost identical, okay? But in here, no, in here is very, very different. So what I wanted to show you, right now the stochastic is almost at the same prices, and the prices are also at the same level almost. But what I wanted to show you is that on a weekly basis also you have this kind of divergence. See, prices here, stochastic almost at the 82, and you see the last time it was on 80, the price is much higher. So you have the divergence in the price and the stochastic. See, stochastic at the same price, and the stock, in this case the index, much lower, so the stock goes down. But what worries me is the monthly chart. If you see the monthly chart, this has gone straight up, made a double bottom, double top, and right now, if you see, we are stochastic almost at the top, and if you see, the price is almost at half of the high. So this is a huge divergence. This is very important, and that's the reason I wanted to show you, because the prices might even go through this high. I don't believe it, but it can go through this high. But if the stochastic on a monthly basis goes down, this has very big chances of going right to the lows of this one, or even lower. Okay, be very careful about this one. This is very important. Okay, of course this is not something for 1-2 months from now. This is something for 1-2 years from now, but the pattern is here. Okay, this is very important. Also, if you see, there's no clear divergence on the lows. You have here a higher low than this one, and the stochastic is also so normal flow of the market. This is what I urge you guys to be very careful. Very big difference. Stochastic at the tops, and here it's not. The price is not at the tops. Okay, so we have our chart. I do believe it will not go through this high, but it can go, and the next target would be this high. However, Remember, this is head and shoulders. I believe this will go and make our move. Even if it crosses above this one, I will have to review my short stop. It's not something I usually do, and if I do it, it's only because of the monthly chart. Okay, it's very powerful. The more the higher the time frame, the more powerful the chart is. Okay, so this is the review of our current setups, and I will make another video with some more education. Okay, be careful.